All right, welcome back. So, in the marketplace right now, we are, coming into the middle of March here, and springtime is, on the way. So, from an overall standpoint, what we're seeing is actually pretty strong demand for fix and flip and for rental loans, the DSCR loans. So, let's talk about what we see from our lenders in that particular space. So, let's talk about fix and flip first of all. So fix and flip right now, rates continue to stay relatively high comparative to what we saw last year. So the typical rates are still between, call it mid 10s and mid 12% range for most of our loan requests for fix and flip. The actual amount they will lend has actually come down a little bit. Even the top lenders are struggling to get to that 90, 100 range. Really, just for the most experienced folks, get 90% of purchase and 100% of rehab. But most of them are in the 80 to 85% of total loan to cost. Well, what that means is that you got to bring a little bit more money into the closing. And what we're finding is that some of our more popular programs are the ones that allow for the 85-ish percent loan to cost, but also don't require a lot of additional reserve requirements. Many lenders are requiring, on top of your down payment, on top of your closing costs, on top of all of that, 6 months worth of interest payments plus a percentage of your rehab budget. So we did a scenario for a couple of our lenders last week because they were asking us about that. And we had a $150,000 property with a $30,000 rehab budget, and our client that wanted to bring the least amount of money out of their pocket. And two of those lenders, by the time you added the extra, amount for the down payment that they needed, the regular closing costs, and now these higher reserve levels, that person needed almost $60,000 worth of liquid reserves to do a $150,000 purchase and $30,000 rehab. Well, that was really more than what most of them want to be able to have available. So in that particular case, a couple of our lighter liquidity options were what our client decided to go for, and those ones were around the $30,000 to $40,000 range. So again, we're seeing higher requirements for liquidity, lower loan to values in the place right now. Rates still in that 10.5% to 12.5% range, and it's a situation where again, they're going to be looking for a little higher experience to get those max leverage. All right, so let's move to the DSCR product. I would have thought with higher rates that would have slowed down quite a bit. Well, what we're finding is our investors that are coming out of rehab loans need a place to go with them, and many of them are opting to rent those properties rather than sell them in today's market. Well, that's good for us. So on the DSCR side, we are seeing rates start to drift down a little bit. You can see, and you can generally see the direction of rates for these DSCR loans by watching either the 5 or 10-year U.S. Treasury. As you see those come down, and the 10-year Treasury has come down to under 3.5% as of the time of this video, which means that it's come down about 50 basis points. Well, those rates are starting to drift down with our lenders as well. So, our top lender can do an 80% loan to value DSCR loan, with a good credit score of, call it 760 or better. You can get that 80% purchase loan, or refinance loan at 75, in the high 7% range, which is still relatively high compared to where we came from. But, it's nice to have sevens back and, away from the eights in most cases. So, that's kind of where DSCR is currently. Lender requirements really haven't gotten tighter in a while. They've been pretty consistent. We are seeing short-term rentals, make a little bit of a comeback, and being able to use AirDNA estimates. We are also starting to see multifamily, meaning 5+ unit properties, starting to make a little bit of comeback. But still, the restrictions there are only about 5 to 9 units can get a reasonable amount of lenders excited about those. So those rates are still going to be in your 8 to 9% range for those multifamily long-term 30-year fixed loans. But again, we are starting to see improvement in those particular markets. So this is the market update for this week. Again, we're in mid-March 2023. I hope you like this, and if you like, click the like button there so you'll see the videos more often. And until next time, everyone continue to have a great spring, and hopefully this market will improve and rates will come down.